Wow, and just like that, it's June. We're here at the beginning of June. My name is Taylor. I'm with HACK&Co at RE/MAX River City, and I'm here with the entire HACK&Co at RE/MAX River City team. We have the illustrious Amy Brown, the amazing Anthony D'Souza, the incredible Craig Bentley, and the illustrious, did I use that one? Should we make another one? Let's go with fantastic Erida Lenahan. Thanks so much for joining me this morning. How's everybody doing?
Good.
Doing pretty good.
Okay, so we must all be bored. Like, real estate is just so ho-hum in 2022 that I don't even know why people would tune into the statistics. There's no news about real estate right now, right? Okay, well, right now we're going to be talking about insight, not information. We're not going to make you read the stats. In fact, we've already read the stats. And more so, what we know is that there's a stark contrast between what you're seeing in the headlines right now and what's actually happening in real estate. So one of the things that we are seeing is that obviously markets are crashing. This is something that we're seeing in national news across the way. How are you seeing that from your perspective, Amy?
I am seeing that markets are crashing in areas like Vancouver and Toronto, but not necessarily in Edmonton, Alberta.
Yeah, that's something that's interesting when you take a look at where these stories are coming from, because some of the effects are happening here, right? Like interest rates have been rising. We've been seeing two major bumps recently. And Tony, I know that you've been talking to a lot of people around you about how they should perceive these interest rates. And I think it is a pretty significant move. Like in monthly payment, it's a big change from 90 days ago. I think we were tracking around $250 a month. What do you say? What are your conversations like with your clients right now related to that?
Yeah, I mean, it really depends on their individual situation, but a lot of families are still considering moving because, you know, the benefit of moving and the cost is still relatively cheap compared to what it has been in the past. But yeah, I guess it's just more having conversations with mortgage brokers and specialists to know what might work best for the specific client.
Yeah, because there are some things that we know. We know that our market is experiencing some change, and there's some groups that really benefit when the market is kind of polar one way or the other. I think that we were talking about this, Erida. We were talking about where the market moves and how it moves and how we measure that. Can you explain a little bit about months of inventory? Why do we use that as a defining point?
Yeah, we just use months of inventory because it measures, you know, is it a seller's, balanced, or a buyer's market?
Yeah, so we take all those houses that are for sale each, like, or they're in total in inventory right now. And to give you an idea of how many houses there are, like right now on the market as of the end of May of 2022, 7,500 as far as total residential goes. And if we didn't list any more houses, like, we're going to list lots of houses. I think that there's some teammates right here, right now, that have listings that nobody knows about yet. Who's got a listing that nobody knows about yet? Yeah. So that's the cool thing about being on the inside of real estate is that you see these things coming. But if we didn't list any more houses and we were selling at the same rate, we're going to run out of inventory in about how long? Do you know what the months of inventory are right now, Erida?
Yeah, so months of inventory is at 2.6.
Yeah, so it's going to take 2.6 months for us to run out of all the houses that we have right now. And we use that as an indicator, right? If that number is lower, it's a seller's market. If it's a higher, it's a buyer's market. What would you call it right now, a buyer's or a seller's market?
Right now, it's definitely still a seller's market.
Totally. 2.6 is sweet because balance isn't until up like 3.5, right? Now, what was it like a couple of months ago? I remember us seeing a very hot market in March.
Yeah, March was at 1.6, so a whole month's difference.
Man, that's going to change the experience of a lot of people in the marketplace. Like, you're working with buyers right now. Was it harder or easier for buyers in March to now?
It was definitely harder in March for them.
Yeah, like repeated multiple offers. And you had some really great wins. I think that one time you were up against 7 other offers and you took somebody to a victory. So we do know how to win in those environments, but the environment's changing a little bit. So those buyers that were a little afraid of the market before, what do you think that we should talk to them about? Water's warm, hey? It's a little bit nicer to be a buyer. It's not quite as hard as it was a couple of months ago. How do you see where our months of inventory is like year over year? Was it just this hot last year?
Last year was pretty similar for May, so it was at 2.9. But for March, it was a lot different. March was at 2.7, which is phenomenally different than 1.6.
So this might fuel a little bit of fear. People see these national headlines, and then they also feel momentum change in their market, but it's not the same as what we had seen even like last year. Let's kind of take that to some other indicators. Is anybody else have any examples of how buyers and sellers are a little bit different than they were 90 days ago?
Yeah, so I've noticed a couple months ago, people were a little bit confused about, hey, if the market's this hot, when should I sell my home? When should I purchase a home? Which order do I do this? And now that we're creeping a little bit closer to a balanced market, even though we're still in a seller's market, people's strategies are slowly starting to change. So you're probably not going to be competing against maybe 10 different offers like you were in March. Or now, if it's a very hot property, you might be competing against maybe 3 or 4 offers. So that will definitely change your approach of when you want to get your house ready to sell. Should you purchase first or sell first? It's now very dependent on the situation rather than before. We were definitely suggesting you should go out and find the property you're looking to move to, because the likelihood of your home selling in multiple offers, if it's a desirable property at the right price point, was very likely.
I think that's a very good point. And I think that the strategy needs to change because there's probably some people out there that are still operating with game plans from 90 days ago. How effective do you think a 90-day ago game plan would be for a buyer? Like if they were using the same tactics they were using 90 days ago, what would go wrong for them?
Well, there's a likelihood that they might overpay. Just assuming with the strategy that you're competing with so many different offers, you need to come in with a preemptive offer, which we were describing as a bully offer when listings were holding offers off to try to get people to compete. There's a very high likelihood that if you're using that same strategy as you were 90 days ago, you are overpaying.
Totally. And every time one thing gets easier, something else gets harder. But for those families that are trying to get from one house to the next, those families that have something to sell and are also buying, it was a much more daunting market in March than it is now. There's definitely some more people that are getting there. Like Anthony, we should give a shout out to the Keller family. They just landed in their new place, and we definitely appreciate them. I know they were all over social media about to set up their amazing farm. So that's pretty exciting. How many other families did you have making that transition a little bit easier now than in the hotter part of the market? Or can you talk about families buying and selling with you?
Yeah, absolutely. It's been interesting and very, very good to have a strategy with each family depending on their needs, depending on what they're looking to buy specifically. With acreages being as hot as they have been, a lot of families have opted to look for the right acreage and then have that confidence listing later on. It's just really dependent on the situation, but it's always nice knowing that we've got great relationships with experts that can help us navigate the best plan forward for whatever the specific needs of the client are.
Oh yeah, it's June. Acreage season is like it's acreage season. You want to see these places, you want to see what they look like in their glory. Now is the time. But a lot of times when people are looking at things like interest rates and what's happening in the market and buyers or sellers, the other thing that they're very much focused on is price and what average price is doing. Amy, you and I were talking a little bit about average price. What do you see there?
Well, I'm seeing things changing quite a bit in all different categories. So right now, average price for a single family home is sitting at $492,000, which is actually down about $8,000 or $9,000 from last month, but still up $27,000 from last year. Condos have just started to climb up. They're about $2,000 up month over month, but they're down $2,000 year over year. So that's a market that's still definitely thawing out. The duplex townhome market month over month is down about 14, but up 33,000 from last year. And the total price for all residential is down about 7,000, but up about 9.
Well, it's interesting. So a little bit of turbulence there.
Yeah, it's a little all over the place.
Yeah. Are we seeing any more trends like that? Like, Craig, days on market, what do you see there?
Actually, days on market month over month are relatively similar, virtually identical. So a single family home right now is averaging about 23 days on the market from the very first day it's listed, all the way to a firm deal. Duplexes and townhouses are slightly above that at 25. And the condo market, as Amy mentioned, that's still thawing out. We're patiently waiting. It's still averaging about 44 days. So overall, all residential averaged at 29 days, slightly under a month. But if we didn't have those condos in there, it would be much lower.
Yeah, that's actually something that we're kind of watching right now, because condos were probably the worst I had ever seen them as far as the number of buyers per sellers, maybe middle of last year. I can't believe how frozen that part of the market was when we had over 10 months of inventory in the downtown core and in places like Oliver. And it would have been so hard on the sellers there just to see their equity dissipate because of changes in the world, things way outside of their control. How people perceived being in high density was a big part of that as we went through COVID. So to see that part of our market start to thaw is actually really exciting to me, because the market moves in segments. And if some of those properties in that 200 range are able to find buyers, they actually displace the sellers of those properties when they're not investments. And the normal upgrade from there would be about $100,000, making more demand in the $300,000 segment. And it moves up and up. And that part of our market has been just frankly missing since 2015. Since the fall in oil, the youngest population, the youngest major population in Canada has not had the same options as they've had in the past. That's what Edmonton is, the youngest major population across the country. And so now what we're really hoping and poising for is, with the change in oil and with what's going on here, and the fact that we sat out from some of the major gains during the pandemic, well, that's key to what's going on and what will happen next. We're also very likely going to sit out on the losses. We're very likely going to be the most affordable place to get a job in Canada. And that's going to be exciting for Edmonton. So we're hearing more and more information in really crazy ways. Like, I was just cruising on TikTok the other day, and I saw somebody who had just bought a property in Edmonton as an investment. And what they were talking about was some of the announcements here, like Edmonton plans to quintuple its population inside of a decade. Right? Think about how many more people could be here. We have one of the lowest population densities in North America. You know, when we take a look at our market and kind of zoom in to what was happening in May, let's talk about the market, or the properties that come to the market and leave the market in those relationship. Tony, sales to listing ratio. What did you see there?
Yeah, so when we're talking about sales to new listing ratio, we're looking at the relationship between the new listings that are coming on the market and then those that are leaving at a successful rate with a sale. Right now for May, what we saw was overall about 60%, which means if there was 10 properties that came to the market, 6 of them would leave with a successful sale. This has been, the same as the month before, but down from just 90 days ago, just slightly, about 10% down. And where we've seen the biggest, the biggest drop overall is from 90 days ago, when single family and then duplex homes were about 90%. Which was super hot. If you had a duplex that you were helping someone buy, you had to be there on day 0, and you likely had lots of people you're competing with. Now it's cooled off a little bit, but still pretty strong. I mean, a 60% likelihood to get a buyer, successfully if you're the newest listing that looks good on the market. This is also down. If we're looking at like this time last year, it's also down. In some parts of this. So like when we look at condos, it's significantly down from last year. When we're looking at single family and duplexes, they're still performing pretty well, but the height of the market might have been last year when we were looking at this.
That gives us some really good perspective on what's coming and going. Like, you see these properties on the shelf versus the ones that are actually leaving in the carts of the shoppers as they go. And a lot of people really can't see the flow from outside. You know, earlier, like in March, as we were describing, the number of for sale signs in the average neighborhood like quadruples. It's easy for people to kind of see buyers and sellers interacting, but now those signs are just moving all over the neighborhood, and they're some of them are still going sold just as fast as they're kind of going up. What do you think about as far as like what we're going to experience next? We're just about to go into this summer market. Our market has more momentum than it has in past years. We see some properties hotter than others, but we also have looming interest rates. Is there anyone who has some kind of thoughts on where the market may go from here?
I think it's still going to trend in a positive direction for us, especially since we know it's so affordable here. I think that there's going to be an initial pause right now as people try to figure out what's best for them. But when you look at the cost of borrowing, it's still pretty cheap overall. And there's lots of great options depending if you're going a variable or fixed. I don't know, we're still so affordable and people still need a place to live. So I expect that, to keep continuing this way where it's, still leaning towards more of a seller's advantage. But I guess the other point is to note that there's still lots of inventory. So although there might be people out there thinking there's nothing to buy, there's actually lots of stuff out there and people are still getting great homes.
Isn't it weird that a lot of people are working from information a little while ago, so they think that there's no properties available, even though something that they might be interested in is already on the market right now?
Like for instance, I've got a couple of buyers looking at writing offers today, and 2 of the 3 are likely going to be competing in multiple offers.
Totally. Now, there's some groups out there that I really wish had more information, like those groups of downsizers. Those people are selling more than they're buying, and they're seeing the market trend away from the significant seller's advantage that was just a few months ago. What are your thoughts as far as downsizers right now that are considering whether or not they should hold or sell and get to that smaller, more manageable space?
For downsizers right now, I think it's a really good opportunity. We've seen a big increase in pricing from the beginning of the year. And since you have a little bit more money invested at the bigger properties, if you can cash out essentially, downsize, buy something a little bit cheaper, you're able to pocket some of that equity. And if the market happens to dip the tattest to bits, you don't sway as much when you have less invested. So I think that's a good idea if you're looking to downsize right now. And also regarding that too, there's a lot of local people here that are listening to the national news, and we're looking for things to slowly cool down. But I have some contacts in Ontario that the market has done so well over the past couple of years. They're looking to capitalize on our low prices right now. So other provinces are relocating here because of our price points. So if people are looking to hesitate a little bit right now and making some of these moves, there's people from other markets that are looking to capitalize on our good pricing.
I totally agree. It's definitely affecting migratory patterns, and I think that that's something that's going to continue. The other thing that I wonder about is with downsizers, it's such a big job. So many of them think about spending one more summer in their house. But the other thing is the summer is probably the time where the most amount of people are available to come and help you. If you're thinking about changing the size of the place that you're in, you may have a different amount of stuff than you think. And if that's the case and you need help from family, you might want to do yard sales and things like that. This is your season. And so if you were my grandma, I'd be saying, hey, listen, you're going to want to start to make plans earlier because there may be less available buyers as interest rates go up. And your house has been outpacing condos over the last year. So what you're selling is a good buy, and what you're buying is a good purchase, and what you're selling is still really desirable to this market where single family is still more resistant to the change than we've seen some other property types be. What other people in the market right now are kind of considering whether or not they should go, or kind of considering timeline? Like Amy, a lot of the people that you deal with are families, and they're trying to do the math. They're trying to say, like, how do I land in my home with my kids in school on like September 1st?
Exactly. That's what a lot of them are looking at. And so I've got a lot of sellers that are coming onto the market right away here. They know that families that are looking to move want to be settled in by the time that they're in the new school year. And they also are wanting to find properties right now. So I was going to say earlier that I still think that this is going to be a bit of a hot market. And I still think that people out there should be on their A game.
Yeah, the good ones definitely go fast. Like we even saw that when it was in a buyer's advantage. If there was what everybody's looking for, which is a well-priced, great place to live, those always get attention. You know, as long as you don't take pictures of them that make them look like crime scenes, just like shadows everywhere. It is tough to get people to see houses that don't have good pictures, right?
Absolutely.
Like it's more likely that our clients are going to call us and request to go see a place that has an amazing picture of a kitchen and it doesn't have enough bedrooms for their family than it is to get them to go to the perfect place that they should buy, but it looks like it's just like one chalk outline away from being on CSI. Yeah, is there anything else that you are seeing that you think is an anomaly or that you wish more people knew as far as like how our market is moving and changing?
I think you just have to be in the know of like what's actually happening. Our clients turn to us and ask us like what they should be doing, and we're using the most current information that's out there, which is super important, using the right playbook to move forward. And since we are monitoring everything that's happening, we have these conversations with each other on a weekly basis. Sometimes we're even talking about the news every day, and what's happening and how it might impact our buyers and sellers here. That's probably the most important thing, is just make sure you got someone looking out for you in your corner.
Mm-hmm.
Yeah, and that's actually the funny perspective is that normally news is attracted to things that are negative, and there's large populations that are having negative experiences, which means that people are totally overlooking this relatively small population, about 1 million people. And even when you compare us to what's happening 3 hours south, Calgary and Edmonton are having a different experience. And I'm going to say that Edmonton is one of the most resilient markets to what we're seeing as far as like what people are calling the shift, whether or not you're in Canada or the United States in real estate right now, as inflation is changing, interest rates are changing. But this isn't crazy. We still know how to calculate this just like we did when the market was good, when the market was in a buyer's market. And I want you to know that a lot of the families that bought properties right into when properties were petering off in price in 2015, they made the money back in months that they lost in years. Like when you look at 2022, look at your tax roll and show me that you've got that value or higher in the past. These things are changing, and a lot of people are just frankly richer than they think. They have more equity than they know over the last little while. And I think that sometimes that translates to options. And it could mean that your family could be in the place that you want to be. But if I had a message for anybody, I would want them to measure interest rates moving up versus the potential of houses moving down in price. Because what we saw is the roughest economic time that we've seen as a province has happened over the last 5 years in recent history. I think that there was some pretty extreme things that happened previously in the 90s and so on. But when we take a look at the big generation of homeowners or homeowners that need more information because they're relatively new, that group should really understand that if your plan is to move next year or the year after, it's very likely interest rates will be a couple of % higher than they are now. And if you're in this price range that we see as being pretty active in this $500,000 range, it may affect your payments. Like this is something you should take to your mortgage professional, but what we're hearing back is around $250 a month. Might affect your purchase power by $50,000. Now, I know that we all have one example in our minds where interest rates went up during hyperinflation and property went down. But if you can't think of 3 more examples, then maybe it doesn't always work like that. And if you sit on the sidelines this time, I think the bank's going to end up with your money instead of the family, and your family ending up with the money as part of your household experience. Is there anyone else that has any other messages that we should take to the public? All right. Well, then know that this team here on screen right now is the #1 team at RE/MAX River City for the month of May. So well done, everybody. There was a lot of hustle here. I have to say that you guys have been incredible at helping families navigate this experience during the pandemic, post-pandemic, during extreme markets. Like some of the records that have been set here by teammates, they're amazing. So I really appreciate the hard work that this team puts forward, including our support staff that you can't see on screen here, including Joel and Tiana and Emily and Cordell. We really appreciate that what it takes to help families get from where they are now to where they want to be. And we take it seriously that this is the largest piece of business in being a family. So save yourself and save your friends from a 3-star experience with someone else. This here on screen right now is your real estate team. Hope you have a great day.
See ya.